What is up, y'all? This is Wil, and this is the Restaurant Owners Uncorked podcast, brought to you by us here at Schedulefly. Simple, web-based restaurant employee scheduling software backed by legendary customer service, and all at a low price point. For whatever reason, we've never raised our prices since we hung our shingle out on the internet on May 1st, 2007. So here we are in 2025 with the same simple price structure. So we have software that's really easy to use, doesn't require any training. We have great customer service in case you need it. We're going to pick up the phone or respond to the email right away. And unlike everything else in your personal and business life that has gone up in cost and price over the last few years, Schedulefly has held down the fort. So we're happy to do that. We have a 30-day free trial, schedulefly.com. My personal cell phone number is on that website on like 3 pages. I use a flip phone. You can call it or you can text it anytime. If you're on pencil and paper or Excel for your scheduling, hey, if it's working for you, stick with it. But if you're getting headaches, people calling out, people needing a me day and not showing up last minute, and you have fire drills trying to just communicate with your staff, Schedulefly will take away that headache. We have aspirin for that headache. Now, if you're on another scheduling platform, we love our competitors, but they're all backed by venture capital or private equity. They're expensive, often a little bit bloated, and you're paying for a lot of features you don't need. If you just want a less expensive, better customer service, easier way to communicate with a tool that just does the job and gets out of the way, give us a shot. 30-day free trial. And again, my personal cell phone number is right there on the website. It's easy to find. Call me, text me, let me know. All right. So here we go on to Restaurant Owners Uncorked. And this is like our 600 and somethingth episode. We just passed 600 episodes. We've been doing this 15 years. And over the years, we've always been happy to have people that own and run restaurants on this podcast, as well as occasional guests who provide awesome services to restaurants. And we have somebody that has done both here today, Nick Patel, who used to own franchise restaurants and found that his real passion was in accounting, and now he helps franchise restaurants manage these crazy razor-thin margins and make sure they're doing a great job of managing their finances through his accounting practice. So, Nick, thank you, and introduce yourself real quick.
Yeah, thank you, Wil. And first, thank you for having me. I love the show. So, as Wil put it, my name is Nick Patel. I'm the founder of Patel Tax and Advisory, which we primarily focus on the restaurant accounting from all different areas, whether it's quick service, full service, franchise, non-franchise. We can handle basically anything food. And I think 90% of our clientele is pretty much businesses or restaurant owners, and the other 10% is typically because owner has like these one-off entities, but usually it sources back to restaurants. Gotcha.
Let's tell your origin story. You were not an accountant before you were a restaurant owner. So talk about how that started.
Well, actually, I was an accountant.
You were an accountant.
Yes.
Yeah. Who decided to own restaurants?
Yeah, it's a funny story because, when you go through life and you go through your education, your upbringing, it almost like creates that leadership style of who you are. And so I went into school and got my bachelor's and my master's degree in accounting. And I got my CPA license in 2011. I worked for some big CPA firms. And I had some family members that were into the restaurant industry, specifically QSR franchises. And as I was going through my accounting career, I was looking at my family member. I was like, man, he's doing well. Yeah, but he also made it look easy. And as we all know, in restaurants, it is not easy. But of course, I was young, I was bold. I was like, I can take over the world. And so I said, let's do it. And I signed up to open up a bunch of restaurants in Palm Beach County with a specific franchise. And me and my family members got together and we were like, all right, let's do this. So we did it from construction to operations, and I was there from every aspect of the business, from delivering to managing every shift to, you name it, like I did it. So we did it for I think I did it for 2 or 3 years, and then I ended up going back into the CPA world because that was more of my element than the restaurant industry was. But that's because the way my management style was, from educating and experience, it was, and I was telling you before, they were calling me like a militant type leader, but not in a negative way. We were very respectful for each other. But I think from my upbringing and from my education, it just made me very detail oriented. It made me very structured. But I guess it came off militant.
Yeah, it's funny because you don't seem even remotely close to being what I would call militant. But I think the part is, you really, when you have like the mindset you need as an accountant, you have to be very detail oriented and very specific about things. And it is a hard. It's funny you said this about your brother-in-law.
My brother-in-law, yeah.
Makes it look easy, and that's the attractive sort of sexy, appealing thing about this industry, is that when you see somebody that gets it and does it right, it just looks cool, and you're like, I want to do that. I mean, when I started this podcast,
so true.
I was like, I'm going to own a restaurant one day, and I'll have this awesome opportunity to learn from all these successful restaurant owners, and then, I'll be able to take what I've learned and leverage that to start my own restaurant. And it didn't take me that long talking to restaurant owners to go, no way. I don't have it in me. I would not make it look easy. I would make it look really stressful and hard, because it is. You have to have a certain kind of wiring and DNA, I think, to do this and to do it in a way that makes it look easy, because it is anything but easy. And people see that easy part, but that's like this tiny little sliver of what really goes on in running restaurants.
You see all the reward, but you don't see all that risk and all that, all it takes to own a restaurant and run a restaurant. Yeah, I can't agree more.
Yeah. Well, okay. How long was it? You got in, you bought into a franchise. Mm-hmm. And you had how many locations? We
had 2 with the ambition of owning 17.
Ah, okay.
But we only got to 2 because I was owning it with my family members, right? So one of the challenges where we had it with our family members. So some families can make it work, some can't. We ended up splitting away, not just because of that, but also it's restaurants, right? As you said earlier, margins are slim. So there wasn't quite enough cash flow to sustain all the partners. So we in a way we were forced to split, but we all kept great relationships. I think that's another thing that's really important. That even if something doesn't work, maintain those relationships. Like I just met you for the couple of days ago, and I'm having a great time. Talking to you. Yeah, you seem so down to earth.
Yeah, well, I feel like I'm down on the earth sometimes, trying to keep up with all this stuff. But if you that's a tough piece, man. We can talk a little bit about that. I mean, getting into business with family is risk reward, but there's if things go south, that can be challenging. You have to really choose your business partners very, very wisely, I think, in any business. In restaurants, I had an owner tell me one time, don't partner with anybody unless you know what they're like under fire. And his point was, he had a friend, they became business partners in a restaurant, but he had never worked with his friend and seen how his friend handled hard times or stressful times, and had to learn that the hard way. And then that sort of strained the friendship as they, wound up parting ways. So it's good that you've been able to keep that,
What we've seen to be successful is the ones that are able to segregate what they're going to do in an operating agreement. I think that's almost like the first piece of advice I give to any restaurant owners. Like, hey, it doesn't matter who you're going into business with, friends, family. If it's family, it's more important to have an operating agreement. And the biggest thing is just being able to segregate who's in charge of what. If your intention is to grow more, okay, you have one person just in charge of construction and developing and growing, while the other person is just concentrating on operations. And as long as they're not crossing paths, you probably won't have a lot of butting of the heads.
Yeah.
That I've seen that with some of our clients. be successful in that. But if you have two people doing operations or doing the same role, then yeah, and I think that's kind of where we were a little bit. But it was cool to see though, because you do get to see the different sides of how management is. But I would say don't cross paths and just go, have like a separate line of duties for each person.
So a really clear, specific operating agreement. Get that dialed in before you get going.
Oh, definitely. A lot of people, they don't see. It's tough because at the beginning, you're in startup mode. You're trying to hoard cash as much as you can. But if it's actually the most important time at the beginning is to make sure that the operating agreement is intact. So if something were to go happen, and even in cases something can go happen that you never expected, maybe like somebody passed away, somebody became disabled, these operating agreements will automatically define what will happen in cases like that. So it's not to be morbid, but it's to really just protect you and your partner and your family.
So what you would need is a good attorney who does these for restaurants to help you think through that. Is that right? Or what's the best?
I would say that's the first step.
Yeah.
See, and we actually never had that when we went with my family, because again, I was young, a little bit naive, and we didn't have that proper operating agreement in place. Now I kind of knew that because I was a CPA. I wasn't ignorant, but I let my ambition get the better judgment of me, I guess, and I never pulled the trigger on an operating agreement, and I wish I did. But good lessons are the best that are hard learned, I guess.
I just wrote this in a blog post the other day. It was a saying my grandfather always used to say, and I always try to remember it. And I still have to learn the hard way, but he would say the best wit is bought wit. Like the best lessons you learn, you paid for them, and unfortunately. And but the good news is you learn from that, and you avoid making that mistake again, and then you get to share that experience on a podcast like this that hopefully helps somebody else avoid making that same mistake. So you had plans of 17. When did you open two back to back, or like?
Oh no! So with the first one we had about 18 months. When we had our first one, 6 months in, we started the construction of the second one. And anyone that's constructed a restaurant always will know that there's always delays. So we were hoping to open it earlier, but because of construction delays, it ended up being 18 months from the construction of the first one. So we had two in about 18 months. But the second one wasn't performing, and it was eating up a lot of the cash from the first one.
Mm.
So at that point, that's when our cash flow was non-existent. We weren't negative because the first one was doing well, but if that second one doesn't do quite as well, it's going to choke the business. I mean, it just took up all the cash. And at that point, that's when we realized, hey, we cannot have another one that does the same type of
right, because then you're
projection.
You got a 50-50 chance. It's either going to be really it'll be like the first one, or it'll be like the second one. If it's like the second one, you're sunk.
Exactly.
Okay, what was the difference between the first one and the second one, looking back?
Different demographics.
Okay. How did you did you find the location yourself? Did the franchisor help? I mean, I think this is an important topic, is like how helpful is the franchisor in helping you make sure that you're picking a good location? Because this kind of thing, with the right tools and the right guidance from a franchisor, may cause some, and I know this because I've talked to some franchisees, sometimes it causes delays and frustration, like, hey, I want to open a location, but they keep telling me that's not a good one, but they're also trying to save you from opening in the wrong place. So what was your experience?
So, in this case, the franchise was able to provide us some pretty good statistics on like how many competitors in the market, what is the number of households in the area. One of the key things for a pizza restaurant is knowing how many kids are living in the area. So they look at what's the average household size, which will indicate the higher it is, likely the more kids that they have, and more kids are living in there, and they typically be more pizza eaters. So every business has like a slightly different trend that you're looking for. So for Marco's Pizza, for example, we're looking for more households. But another franchise, for example, something that has like a drive-through, they're probably looking for more what do you call it? The traffic data. So depending on which industry it is, you want to look for different types of KPIs that could make a difference for that business. There's other things too, like location, signage. Are you on a end cap versus inline? For the second location, I think some of the problem was there wasn't enough households, and there was also increasing competition at the same time when we were constructing, which was not in the original data.
Wasn't in the data.
So
okay.
So as you grand open, and then there's another one coming, you're fighting for the same type of clientele. And
so a competitor that's nearby that now slices into your potential.
Exactly.
Okay.
So interestingly, we ended up selling that unit, but the competitor was the one that actually closed down. So interestingly, this one survived the storm.
So, but you get to 2 and you're like, okay, this isn't going to work. So what did you do? Did y'all?
At that point, we decided there wasn't enough cash flow, so we had to break ways. So at that point, long story short, one of the partners actually ended up buying us all 3 out.
Okay.
And then that partner was the one that ended up selling the second location and kept the first one. And the first one did fantastic. He's instead of having the mentality of growing with a bunch of stores, he's like, now let me just focus on this one store, and he grew it, and it became very successful.
Yeah.
So
okay. That's great.
Yeah, he's an amazing.
Is he still in it?
He sold it so he can open more stores up north.
Oh,
yeah,
up north.
Jacksonville.
In Jacksonville.
Yeah.
Okay.
So our original locations were in Palm Beach.
Okay.
And when he sold the first location, you get that feeling of success now, right? You've done your time. You put in the hours. Once you've really figured out the system, then it's like, okay, now I've got the confidence to open more.
Yeah.
Which is really our mistake when we first opened. Rather than we went out there and said, conquer the world. Let's get a 17-store agreement and let's just go for it. When the reality was we should have stepped back and said, hey, let's just do one. Let's master it.
Yes.
And then from there, grow out and do more.
Yes.
Because we were growing confidence without the experience. And I think that was our biggest problem.
Focus, dominate is the best business advice I've ever gotten in my life. It was given to me as a young man when I had a different company. I was a co-founder of a different business. We were all over the place. And my business partner's uncle, I'm 51 now. He's probably in his 50s.
You're 51? Wow, yeah. You're great.
And I look a little younger when I shave this white beard off. But so he said, look, we had a product, and it was meant for banks. But we were like, oh, well, these people could use it, and they could use it, and accountants could use it. It was industry intelligence for meeting with business owners to understand their business. So I'm going to meet with a plastics manufacturing CFO. I don't know anything about plastics manufacturing. Boom, I read this report. It's quick, it's concise, and it gives me questions and stuff I need to know. Kind of like when we were asking Grok on the way over here. Tell me what I should ask this person. That's what this would do. And we knew it was for bankers because we made it for bankers. But we were like, well, accountants need it, and commercial insurance brokers need it, and these people need it. And he's like, yeah, dude. But you go dominate the banking industry first. Just do nothing but that. Focus. Dominate. Once you've just nailed that vertical, then go to another vertical. But you got to have a laser focus. And I think that's really apropos in almost any business. It's it's easy to get the shiny new objectism. It's easy to get these big ideas and big dreams and go for it. But you got to just lock in and focus on blocking and tackling and just nailing the basics of running this one single business and really, really getting it dialed in. Which it sounds like, look, tough situation for y'all, worked out well. dude sold it. Now he's up in Jacksonville. You got a CPA. I mean, this is like, a cool outcome, right? Did he is he with that same franchise up there? Or did he open different?
Same franchise. He has a partner, but they have multiple locations now.
And they're up in Jacksonville.
Yeah. Going back to your point, I want to put some more emphasis on. I can't agree more about going into something and really focusing and just really putting your all your efforts into a niche. Like one thing that we both have in common, and the industries we both go after are the restaurant industry. So, I mean, that's basically our focus. And just like with Schedule Fly, yours is geared just for restaurants.
Yep.
And that's what they say, riches are in the niches, right?
The riches are in the niches. There you go. Yeah. That's right, though, dude. Like, all the time, we have people that are like, why don't you sell into this industry? Or why don't you sell into that industry? And, they need scheduling. And yeah, sure. But we don't really know that. There's massive amounts of white space in the industry. Like, we haven't dominated our industry yet. So, we got to stay focused on it until we look, we have 5,000 customers. I'd like to get to 10,000. When we get to 10,000, maybe we can think about something. I just had this conversation with one of my colleagues yesterday, because we were talking about, I was over at Cake, the point of sale company. Do you know Cake? Yeah. Do you know them?
Well, I don't know them, but I know you were there yesterday.
Yeah. So, I tagged you in that LinkedIn post last night. I was sitting up there. Yeah. So, I hope that's okay.
Oh, yeah.
Yeah,
of
okay.
course. I mean, anything restaurants is great.
Yeah. That I tagged you on LinkedIn. I just do that stuff.
Oh, anytime. No problem at all.
Okay, yeah.
I'll probably randomly tag you too.
Okay, well, that's fine. I'm trying to start telling our story. I want to start doing that. But anyway, I'm over at Cake yesterday, the point of sale company for independent restaurants, 1 to 5. You should probably know them. I mean, good company. They're owned by a company called Mad Mobile, and Mad Mobile does point of sale for a lot of luxury brands like Estee Lauder and Ralph Lauren and all this stuff.
Okay.
So that's Mad Mobile's main business. And then they bought Cake from Cisco, and that was sort of their entry into the world of hospitality. My point is, I was talking to one of my business partners, and she's like, she was in investment banking, and her career and in the past, and she dealt in retail. And she's like, I know we want to focus, but I'm telling you, retail would be really good for us. And I was like, Jen, hold on.
Yeah.
I hear you. We're going to reel this back in.
Focus.
As I said that, I was like, let's get to 10,000 restaurants first, then you can talk to me about retail. She's like, fair enough. Because it's easy. You just sort of I'm sure as an accountant, you're like, well, I could serve these people too. But when you do what you do, you're now the expert around. You're the guy, right? If you own a restaurant, Nick's the guy. And that's a good thing to be.
I think so.
Yeah, man. you can claim, I mean, you can legitimately say, I am an expert at helping restaurants with their accounting.
I'm comfortable with that, yeah.
Absolutely, man.
There's not a lot of CPAs that have actually been in the shoes of the restaurant owner.
Yeah.
So we know what it takes. I mean, when you're in there, it's hard to get out. So we understand, we're patient with our clients. It's hey, I've been in your shoes. Try to get it to us in 6 or 7 days if we have a request. So
yeah.
Sorry, I didn't mean to interrupt.
No, but you're right. Dude, I mean, there's just so much going on. I feel like when you run a restaurant, you're hopefully not actual fires, but you're putting out metaphorical fires all the time. And the one that's burning the brightest is the one that you're going to put out. I mean, we have people that, most of our customers are monthly, but we have 30% or something, maybe more, prepay for the year. So when it renews, it doesn't auto renew, and we have to kind of hey guys, we need you to renew. Well, they don't. A lot of times, they don't get around to that until maybe we have to turn off their access. That's our last resort. But it's not the brightest burning fire. We may have called them and emailed them 10 times. They're yeah, I'll get to that, but I got to deal with this first. But then when Schedule Fly gets cut off, they're like, crap, now that's the biggest fire. But you can relate to that, which is huge, because you've got that, you've got that emotional connection to understand and empathize with what it's like.
Yeah, I mean, the restaurant business is really the people business. I mean, you're dealing with the general public, so they can be complaints, they can be, so many different aspects that can affect the business just from the people line alone. So whether it's even your employees, you're not, when you typically hire employees, a lot of them may have, a lot of people you may have hired might be their first job.
Yeah.
So they need educating on, okay, what's the proper etiquette? What's the proper requirements of a job? I've never had a job. So this, I mean, you're teaching brand new kids, teenagers, like from the bottom up of like, all right, this is what you need to be a good employee. And that's a challenge in itself.
Yeah.
That's what's really cool about Schedule Fly, because it does take away some of the scheduling issues, because sometimes kids will do it, or teenagers, and they're like, oh wow, work is a lot of work. So if they may just call out, they may just quit all of a sudden.
Yep.
And then you're short staffed, and then that's your fire now.
Yeah.
That you're dealing with. Okay, I'm short staffed, I have to cancel everything I've done, so I got to put Schedule Fly renewal on the bench, and I just have to get my business operations running again.
Yeah.
And yeah, it's like it's a people business, from dealing with your staff to dealing with the your general public, the customers. It's one of many challenges, in my opinion.
Well, so when you realized, okay, this isn't going to work, I'm going to go, you know right away, you're like, okay, we're going to exit this thing, and then I want to go start an accounting practice?
What it's interesting, that wasn't my first that was my first thing that I wanted to do. We did want to grow to the 17 stores, but we did have to pivot. So luckily I had that accounting background, but now after having to part ways with the restaurants, I still had that accounting background, but I also have my restaurant background now. And when we were talking earlier about maintaining good relationships, we were able to become a preferred vendor of that specific franchise. So that's really what kicked off my accounting business, because I had that relationship with the brand, and I became the preferred vendor. And now we're getting more and more franchise accounts just for this one brand alone.
Yeah.
So that relationship that we were able to maintain really flourished.
Okay.
So I didn't let the I don't want to say demise, but the not unsuccessful restaurant venture that I pursued, let it be the downfall, and just say, you know what, I'm just going to go back into the accounting corporate world and just sit back and
turn it
do tax
into an
returns.
opportunity.
Exactly. Yeah. But I wanted to do it strictly for restaurants because of that piece that we were talking about. I can relate to what they're saying. And now I know the ins and outs of the restaurant business, because as a CPA running the restaurant, I was able to figure out, okay, what tax credits can we utilize for this industry? And there's actually a decent amount out there that I can't believe a lot of people don't know.
What's an example of that?
Oh, gosh. So one of the big things in the food and beverage industry is the FICA tip credit. So what the government allows you to do is when the employees report their tips, the employer gets a special tax credit for claiming those tips. So for example, we have a client that has a couple franchises, and I think they received about $15,000 to $20,000 in FICA tip credits. It wiped out their entire tax bill. That, in addition to their kids, I think this individual has like three children. So in addition, so you add those together, it wiped out their entire tax bill. And I think they were AGI was about 150 to 200,000 and no tax. So these credits are hugely powerful, and especially in a restaurant industry when margins are low, these credits can be very valuable.
And so there are restaurants that don't know about this.
Oh, there's tons. Yeah. So actually a lot of clients.
Is that because their accountants don't know about this, or because they don't
specialize in restaurants?
Yeah.
And that's just one of them, right? There's another really useful one called the WOTC, stands for Work Opportunity Tax Credit.
Okay.
So when you hire certain individuals, you could qualify for these WOTC credits, which has to get qualified through the state. And that's another avenue to get even more tax credits.
Okay.
So remember, tax credits are better than deductions.
Yes.
Right? So these credits are dollar for dollar reductions right from your tax bill.
Right. You got a $10,000 tax bill, but you got $10,000 in credit. You owe no taxes.
Exactly. So
much better than a deduction would just be reducing the amount that the
taxable income
basis, the taxable income. Okay, gotcha. Yep.
So these two credits alone can provide tremendous value. And when we don't see those on the returns, it just makes us look even better.
Wow. So that's fascinating, man. So this is like, I mean, I just didn't realize how incredibly important it is that you have an accountant that really understands restaurants, not just an accountant.
Oh yeah, that's a lot. And like we were saying, riches are in the niches, right? So when majority of our clients are in restaurants, we focus on credits specifically for restaurants. So whether it's FICA tip credits, the WOTC, special depreciation methods like QIP, all these things can make a huge difference in people's tax bill, especially when they're first starting. Right? When you first start, you have all these leasehold improvements that you have to account for, all these equipments you need to trace. But if you don't account for it correctly, you may not get the depreciation on the back end.
Yeah.
So we always, especially for first-time restaurant owners, like just try to keep track of as many costs as you possibly can. And then once you get closer to opening, then contact us. Give us that spreadsheet, and we'll create those opening balances for you. So we try to keep the cost a little bit lower, but at least we're capturing a lot of these assets so we can depreciate them at the time of opening.
So it's good for you to get in before they open. You're doing business debut, aren't you? Aren't you doing Raw?
Yeah.
Okay.
Yeah, we actually just signed up with them a couple weeks back because I was like, schedule flies on it. All right, sign me up.
Well, I've seen some of the referrals come in that have, because we get whatever the ones that say that they want to talk about schedule fly, and I've seen some that have Patel. That's awesome.
Yeah.
What do you do with those? How do you call them? Do you have somebody here that how do you follow up with them? They're hard to get in touch with. People are opening restaurants.
Yeah. I try to be patient. Okay. So what we do, I send them an email, and then I'll provide like a little pamphlet. It's like, this is what we can do. You let us know if you'd like to move forward. And then I also have my admin, Tom, call them one time. So they have one email, one phone call, just in case, like if the email gets buried or something like that. Again, these restaurant owners are busy.
They're very busy, especially when they're trying to open, and they've got tons of people calling them for tons of reasons.
And the biggest thing too, it's like a biggest headache too, because when you're opening, you're just trying to get that CO, that certificate of occupancy.
Yeah.
But then there's so much red tape around. Oh, this inspector didn't like this, so they didn't approve it.
Yeah.
And so a lot of times people will say, "Oh, I'm opening in March," and then I'll write down on a piece of paper, "Okay, expect to open in June or July," because I know there's always going to be some sort of
delays. Yeah.
So that's why we're not high pressure sales. So we understand there's probably some delays on their end, or there's probably some fire that they're trying to put out, and we may contact them again after 2 or 3 months, but we don't like to do the high pressure technique, because we have a decent amount of referrals because coming in naturally word of mouth. But for the new program that we signed up for, I just do one phone call and one email.
Okay. Have you got any that have called you back?
Nothing yet. But I'm sure we'll get some. So we just started too. We only started, I think, 2 weeks ago.
Yeah.
2 or 3 weeks ago.
Yeah.
So no conversions quite yet. But our price point's more than your price point. Yeah. So yours is probably easier to swallow than mine.
It is, but it's like scheduling's, it's not top of mind, right? You're opening a restaurant. We've been trying. Mike and I've been talking about how the thing about schedule fly that people think of, if they just think of scheduling, well, they're like, I don't have to schedule my employees until I open. But what we say is, look, this is like a communication portal. Like as you hire a manager and a GM, and you start hiring people on before you open, and you want to try, like, this is how you communicate, because we have all these communication tools in there as well. This is how our customers talk to their employees through schedule fly, right? So we try to get them dialed in before they're open, so they can just have that communication stream in one place, and then as they open, they can start scheduling and things like that. But yeah, it's tough because they have got so many things going on. Ross does a good job of connecting with these people. I mean, I'm surprised at how many people that are opening restaurants he and his team are able to get in touch with and have a conversation. And
I think a lot of it's through cold calling.
It is.
I think, yeah.
That's how he got in touch with me.
Oh, is that right?
Yeah, like a year ago. I was sitting on my porch one evening, and he called my cell phone because it's on our website, and I have it on LinkedIn. I'm like, here's my cell phone number. Call it if you want. Nobody ever does. He called me one night.
That's funny. Wait, hold on. So you put your phone number. I mean, you said it right in the introduction. Like it's on Schedule Fly. It's
public. Everywhere. It's very public.
And you don't get that many phone calls.
I get a lot of spam calls.
Yeah.
I get a lot of spam calls and a lot of spam texts. Probably more than the average person. Everybody gets them now. I get a lot.
I mean, yours is more public than most.
My number is out there, dude. But it's actually amazing to me the variance between what people expect must be happening. From like, I am the owner of this business. I have my cell phone number on our website. We have 250,000 end users, 5,000 restaurants. You think like you must get constant calls. I mean, dude.
Oh, that's your phone? I thought
that's
that
my
was
phone. Nothing. I mean, that's it. That's my phone, flip phone. And the people don't call. I mean, people don't call anymore. That's why Ross called and he was like, "Hey, you put your number out there. Would it be cool if I tell you what I'm doing?" I'm like, "Fire away."
Do you get people texting you?
Some, but not many.
Really? So not even on the texting end. Wow.
I mean, I can text. I mean, you can text on a flip phone. But no, so he called and told me what he was doing. And look, I admire people that are willing to cold call because it's hard. And it's really hard. And so I was like, all right, I'm going to give this guy 30 seconds, right? I mean, I'll give most people 30 seconds. And then if it's not clicking, I'll be like, look, I appreciate it, but this is really the best fit for us. But I get so few calls that when somebody calls now, I'll take it. I'll give it to him. He just tell me what he's doing. I'm like, this sounds kind of cool. Let's give this guy a shot.
And he's new too, right? He just started maybe like a year?
Like a year ago. I mean, I think he called me in like, I don't know, last fall. It hadn't even been a year yet. And we just started with like, so this is, for those of you listening, this is businessdebut.com. It's really cool. Our buddy Ross has got this thing rolling, and he gets restaurant owners that are opening restaurants in Georgia and Florida, and I think now North Carolina, or soon to be North Carolina. He writes a story about their restaurant, and he posts it on businessdebut.com. That gives them some publicity, gives them some SEO, and he does that at no cost to the restaurant owner. His ask is if they would let him or his team share with them who his sponsors are. And so Schedulefly and Patel, CPA, are sponsors. And if they're talking to a restaurant owner and they say, hey, who are you using for accounting? And they're like, I don't know. I don't have an accountant. Oh, we have this great firm. Could I tell you about it? And then they tell them about it. And then if that person's like, sure, I'd be happy to hear from Nick, then Nick gets the lead from Ross. And if they don't have a scheduling platform, they get the scope. For those of you that are listening to this, the reason I'm telling this is that we have, obviously, restaurant owners out there that are listening, but we also have other service providers that listen to this podcast. I highly recommend getting in touch with Ross. They're very good at what they do. They send really good, warm leads. And he's a small business, and he's just started, and he's working really hard, and he's developed a lot of really good sponsors. And businessdebut.com is his site. So there's my commercial, my pitch for Business Debut. But I like that. I like the fact that Ross picked up the phone and called. I mean, people, it's such a basic thing, and people don't do that anymore. I mean, I can't tell you how many venture capital people try to get in touch with us. Like, hey, your business is great,
They didn't pass the 30-second.
They don't call.
Oh, they don't call?
Dude, I mean, in all these years, my cell phone number has been on that website, and all we ever get is emails. And they're just like canned template emails. And I'm like, not one of you young analysts at any of these private equity firms or venture, not one of them has been like, dude, this guy's number. I'm just going to call this guy. And I would actually have the conversation. But I get these emails. I'm like, we're good. We don't need money. Thank you. It's really weird. Anyway.
That's amazing.
Yeah.
It's that high touch like you have and Business Debut has. It's almost like hard to find now.
It's very hard to find.
Yeah. Everything's becoming systematized. I guess now they're doing emails more often. But I'm surprised even on the text messaging. People text a lot more than they call, and you don't even get those. That's mind-boggling to me.
It is.
Yeah.
There's value in these tools like AI. I mean, we're sitting in your car talking to Grok, asking like, "Hey, what are some good things for us to talk about?" That's like really cool. So I like it for that, but what I don't like and what concerns me is that we're outsourcing so much of our interpersonal communication and relationships, and just putting it out there and letting AI do stuff for us. Gosh, if you're in the restaurant business, like you said, it is a people business. And the more time we spend on our phones and on our devices, and the less we have interpersonal communication, the less intentional, thoughtful interactions we have with other human beings, it depersonalizes everything to the point that it's just, it concerns me. I love technology. I own a technology business, but I'm also wary of people that lean into technology so much that it just takes the humanity out of everything. And it's fine. Like, McDonald's probably won't have many people working in a McDonald's in 5 years. I bet they'll have a lot of equipment that cooks the food, screens everywhere, and maybe some dude running around just like tending to the equipment. But fine. But on the other side of that is humans are never going to not need interpersonal communication, and the best place to get that is a restaurant, right? Like, go with your family and spend time together, go with your friends and spend time together, and be served by people that care that you're there. That's hard. It's not hard to care as an owner. It's hard to get a 18-year-old kid. I have them. I have 3 kids that are about that age. Hard to get them to care. But that's a big challenge, right? As a restaurant owner, you need to have people that hopefully you can mold them into, like you said, a lot of times it's their first job. But I view restaurants as it's like everybody ought to have a restaurant job, because if you go work in a restaurant for a little while, you're going to have to master a whole lot of different skill sets. Calm under pressure, interpersonal communication, teamwork, serving the public, lifting up your teammates when they're down, balancing a lot of things at one time, like, salesmanship, persuasion, customer service, dealing with upset people. If you can do those things well, you can do a lot of different jobs, right? Because those are tradable skill sets. Those are universal skill sets. And the best place to learn that under fire is a restaurant. You go work in a restaurant for a year, you're going to have a lot of things. I don't care what you go do. Go run an accounting firm. You're going to learn a lot from that, I think. Do you think that?
Oh, no, 100% agree. I actually, it's funny you say that, because I do think one of the first jobs I think most people should be a restaurant, just like you were saying, because, man, you do work hard in a restaurant. I mean, your mind has to be multitasking constantly. You have to, and you're earning that money.
Yeah,
I really feel like it shows you the value. I mean, again, I'm an accountant, so we look at money all the time, but it really shows you the value of money and how hard it is to earn that money. So being your first job in a restaurant, I can't agree more. And the other part is, as you said, it will force you to be in front of people.
Yeah.
Yeah, because there's going to be a lot of areas that AI can't take over, and I think there's always going to be that human touch. Obviously, AI can't replace. like what you're doing with Schedule Fly, or what Ross is actually calling everybody, or our firm actually start talking to the clients. We actually, and like in our firm, depending on how they want to do it, we can meet with them every month, every week, so they see like a human, as well as our reports, and then we go over it. But going back to working in a restaurant, yes, it should be everybody's first job.
I think it should, man.
Yeah.
I'm not big on government mandates for anything, but I got to tell you, I don't think
there should be one.
if there was one, I would sign up for. It'd be like you have to as a before you're 22, you have to work for a year in a restaurant. Like I think we'd all be better off. All right, so tell me, Nick, about your as you grow your business. I'm just trying to sit here and think, okay, like how many people do you have on your team here?
Well, we have a global team, so we have including myself, we have 4 people here in the U.S.
Okay.
But overseas in India, we have I think we're at 10.
Okay.
Yeah. So by doing that, it's helping to keep our costs lower.
Yes.
So we can just move those costs to the restaurateur.
Okay. Got it.
So it works well.
So you can keep growing.
It does help us grow, but it also helps us commit to that level of service too, because.
Well, this is what I was getting at. Like, how do you grow and scale what you're doing and still provide that
level of service?
Mm-hmm.
So, and a lot of it depends on the business itself, right? So a lot of times, many franchisees, for example, they may not want that high touch, because the reason they're doing it is because they're forced to with compliance with the brand, and some of them just want that. Okay. So we'll say, okay, not a problem, we can do that. Then we're going to remove the costs that have anything to do with any service from us. Or service meaning having weekly or monthly meetings. So we have a service just for that. But then for restaurants that need a little bit more servicing, such as a high-end restaurant, fine dining, fast casual, they may need more help on cash flow management. They may need more help on AP management. So for those, we have more frequent meetings. But and I'm typically on most of those meetings. If not, we have someone that's highly specialized in that industry or in that brand to be able to help them with their financial reports.
So, but you don't need your customers to be local. You've got customers.
Oh, we have all over the U.S.
All over the U.S.
All over the U.S. Because now, and that's the thing with the technology now, we can do so much with technology that we can rely on some automations with the technology, but at the same time still provide that high-touch service by scheduling meetings, and we'll even have them just recurring every week. So every week we're going to meet at this time at 10 a.m.
Okay.
And if they can make it, great. If not, we will still be there. And we'll just have it right off of Teams, which is like Zoom. And we recap the meeting as well. So we have a special note taker that we use. So you don't see me writing things. You see me fully attending to what the client is saying. Mm-hmm. And by having our note taker in the background, we can look at those notes after the meeting's over. We can look at them, tweak them, revise them, and then send them off to the client saying, all right, this is what we spoke about. Here are the action items that you're in. Here are the action items on my end. Here's the highlights of your financials. And so we use the best of both worlds. Hmm. But you're right. Technology cannot outsource absolutely everything.
Yeah.
You still need that high-touch restaurant intuition from the accountants to be able to determine where are some of the shortfalls, where are some of the pain points that you're feeling, and then we can help them navigate that way.
Okay, gotcha. So when you start getting into, let's take, I don't know, somebody that owns multiple full-service restaurants, things can get, it's just more complicated. Like, do you do a lot of...
Sure. I think I know what you're getting at. You're saying like more consolidations, more things like that?
Just planning inside and outside of the business. Like, I own 6 restaurants. Like, do you help me think through not only my business planning, but my personal planning and how that intertwines? And
Oh yeah, absolutely. Yeah, we do have comprehensive tax advisory as well.
Yeah.
So while we focus, obviously one vertical is restaurant accounting, but the other piece that we do is tax planning as well. So we're part of Tax Advisor Networks. I actually go to speaking events where I'm fortunate enough to be able to speak on tax planning opportunities.
Okay.
For example, if someone is opening a restaurant, and typically if they're using heavy depreciation, and they have a traditional IRA, we would recommend them to, hey, this is a perfect time to do a Roth conversion. So your tax can be tax neutral by utilizing the depreciation from your restaurant business, and then that money that you're showing a loss, we'll use it against the income that's getting produced from the conversion.
Mm-hmm.
And by getting them to neutral zero, they don't actually pay anything.
Okay.
But now they've created a tax-free vehicle through a Roth,
Yeah.
and we help that grow through time.
Okay.
So what's happening is we've used this year's tax deduction to help fund a tax-free vehicle.
Okay.
Right. So now we don't do financial planning where, you get commissions and things like that, but we help them understand this is what you can do and this is what we recommend. And if you want us to be with you with a financial advisor, we can be there.
Okay.
Yeah. So we do some pretty cool things like that.
Okay. What are some of the things, maybe like the common misconceptions that you see people that are opening restaurants? Like, let's say you were to get on the phone with some of these folks that Ross sent to you. What's the conversation you have with them?
So I haven't had a conversation with them yet.
But I mean, if you did.
But if I did, I think the biggest thing is if it's their first restaurant, I think I need to open their eyes to what they're getting into.
Yeah.
Right. I think the people component, which is almost a piece that I didn't grasp as much when I started my first restaurant, is how many people you're dealing with day in, day out.
Yeah.
The people, your employees, your customers, vendors, even your contractors, even the government with just trying to get permits. There's like so many different types of people that you have to work with, and different personalities you have to work with. I'd say that's one thing. The second thing is, if you're going in with that partnership, if you're going with partners, make sure you have that operating agreement. Protect yourself now to prevent any exit wounds if something were to happen.
Yeah.
And then the third thing, I was like, make sure you set up budgets and forecasts, and at least have your break even calculated, so you know the targets you need to hit when you open your restaurant. Mm-hmm. So by providing targets, you're providing like I don't want to say incentive, but in a way, an incentive for something to hit, so you know you're not going to be bleeding any cash. And that's just a planning piece.
Okay. How many months of operating cash should a restaurant have on hand when they open?
I mean, I'm conservative on this. So I typically like to see 6 months of your fixed costs.
Yeah. Okay.
And the reason I say fixed costs is because your variable costs can, like, for example, if your sales go down, well, then you can cut on your labor, you can cut on your food. So those I say don't worry about so much, because you can control those. We call those controllable costs. But your fixed costs, or your uncontrollable costs, like rent, insurance, things of those nature, I like to see at least 6 months of reserves of just that.
Okay.
And even your loan, if you end up getting a loan, I want to see six months of debt servicing costs.
Okay.
So as long as you have that, then at least you're good for 6 months.
Yeah.
But it will give you enough in the bank to where you don't have to keep looking at your bank account. You can just focus on getting your operations to a more efficient or more smoothly running restaurant. Because at the beginning, you're probably pushing so much money into labor, because you need to get your employees to be able to do the shifts properly. So you're overpaying on labor.
Yeah.
Just to make sure, okay, this is what we're doing. Here's all the training. Here's the job aids. This is your stations. Like, there's so many different aspects that you have to focus on that you typically overspend at the beginning. So having 6 months will help budget that a little bit.
And that's the same number I've heard before. I suspect that most restaurants don't have that when they open, or is that, or do you typically see that they do?
Well, a lot of times if they have debt, the banks will typically put in initial capital to put into the business so they can help you. They can use that money to get smoother operations. But if they don't have that, then to your point, you have to plan for that. Otherwise, you may have not infused enough cash, or you will force an infusion of cash in a short period of time. So planning's big. So just to make sure you're not caught by surprise, the planning that we provide, if they decide they want to move forward with it, they can help them project what they're going to need.
Okay. Yeah. Okay. Yeah. So, okay.
It's tricky because every business is different. Every restaurant, I should say, is different. It's a quick service restaurant, for example, you can start it at like 600,000. But if you do a fine dining restaurant, you could be at 5 or 6 million.
Mm-hmm.
But if you're at a fine dining restaurant getting 5 to 6 million, the owners are probably are experienced, have done it before, so they may not need as much handholding, which is kind of counterintuitive, right? You would think the more it is, the more planning they need. But actually, the ones that are smaller are probably ones that need a little bit more help or a little bit more handholding, just because it might be their first venture, they don't know what they're getting into, and they just need more help. I think some of it too is ignorance. Like when I came into the restaurant, I was ignorant in some parts of the business. So it is good to meet with either a fellow restaurateur or an accountant that has restaurants behind them that can help you with those planning areas, so you don't get caught off guard.
What are the mistakes that you see restaurant owners making frequently that you would, like, let's put it this way. Let's say I'm getting ready to open a restaurant and I'm excited and I'm going to have this cool place. I got my 6 months working, like I'm good. But what are the things that because I think this is a really important part of this conversation. There's so many restaurants that open their doors and don't make it a year or don't make it 3 years. I don't know what the real number is. You hear all these different statistics. Whatever it is, it is. But we all know it's not insignificant. Yeah. Like it is but I feel like with the right tools, resources, partners in place, you could at least decrease. I mean, you're not going to, some places it's just the nature of business, but if restaurant owners weren't as naive or ignorant and knew things that they unfortunately probably wind up learning the hard way, they could have a better chance of success. So in other words, well, let me ask you this. You're talking to a young you who's getting ready to get into this. Like, what do you say?
Yeah, so a lot of these things you're talking about is mitigating risk. And that's where we were kind of harping a little bit earlier, is just planning. Like, put all your focus into the planning. Figure out what demographics are you going after. Figure out, is there enough population to be able to service, and the right type of client or the right type of customers that you want to service at your restaurant. And there's a lot of tools out there that you can use to help figure out, is there enough traffic patterns? Is there enough households in a 1, 2, 3 mile radius to be able to come to the restaurant? So if you're able to get these key indicators, it will help you plan to see if it's going to be successful. Another thing to see is, what is your break even, right? Before you even go into a lease space, you're going to need to know, okay, well, how much is that going to cost? Rent in most restaurants is going to be one of the highest fixed costs. So fixed costs, when it comes to break-even analysis, is going to be one of the biggest factors. So once you have an idea of what you believe rent will be, that will help you be able to calculate what break-even analysis is going to be. And then from there, you can kind of reverse engineer it. Say, okay, I need to have $20,000 a week in sales just to break even. So do I have enough potential customers to be able to at least get me to 20,000? And then what does your growth in those areas look like? For example, if you're going into a city with small growth or larger growth, that's going to dictate, okay, whatever projection, am I going to increase about 5% a year, 10% a year? Who knows what it's going to be? Depending on what research you've done, it will help you determine, okay, I can say on my projection, I may be increasing 5 to 10%. And then you can start calculating your bottom line. So break even and out to your risk, to your point earlier about what they can do to reduce risk, figure out break even, do market research, and also go to your competitors. You know, one thing that we did that was really interesting is we went to our closest competitors to try to gauge how much sales that location did. So for example, in the pizza business, if you have, say, 2 Domino's next to you or a Pizza Hut, you go over to those restaurants and you typically go at the end of the day and try to gauge, okay, this is invoice number 200. And if their average ticket, say, is about $20, so $20 at the invoice, or the receipt number, sorry. And if it says number 200 and the $20 is, okay, so they're doing about $4,000 a day. If you did that every day for the week and try to get like an average of what they're doing, that could help you say, how much am I going to do at this location?
All right. So to be clear, you go to Domino's, you like order a pizza 9 o'clock at night or whatever.
Mm-hmm.
How do you know it? You're talking about like the receipt number or what?
Yes, every receipt number has like a unique number to it.
Oh, and you figure out.
Yeah, and it typically resets to 0 on the next
every day. Okay.
Now, maybe they've changed it, maybe they haven't.
That's really good. See, this is that's great advice. That is awesome. Because that's.
And sometimes what you can do too, if they don't reset it, you have to do it 2 days. So, all right, be the last customer on Friday. And if the number is, say, the receipt number is 300, well, then you go on Saturday, do the same thing, be the last customer. Maybe the receipt number says 500. So that means there's probably 200 transactions that happen from Friday night to Saturday night. And you get that number, times it by what you believe is the average ticket price is, and that will give you an average gauge of sales.
Wouldn't you go in on Saturday morning and be the first customer and figure out if it's 301 or if it's 1 or whatever?
You could, but then you'd have to go in twice. So if you go in Friday night and it's a low number, say 100, let's just say it's 100, then you can confidently say, okay, well, they reset their tickets every morning. Because if someone were to show, let's say you go on Friday night and your intention was only to go in there one time.
Yeah.
But then their sales receipt number says 10,500. Well, there's no way they did 10,500 sales in a day. So that tells you, okay, I have to come in the next day at nighttime to figure it out.
See the difference.
Exactly.
I gotcha. Okay. I gotcha. Very good advice.
These are ways just to gauge or project sales. But you want to do this, of course, if you plan on that being in one location, I would say look at your first mile and look at all the restaurants within your mile and try to gauge how much are they selling. And if you just capture a little bit of that pizza restaurant or pizza delivery service, you can kind of get a gauge of what you think you're going to do at that location. But you want to do it within your 1 mile radius because typically there's a lot of delivery in the pizza business.
How do you avoid or mitigate the chances of what happened at your second location happening, where you have the data, you got your location, you're building out, and then all of a sudden now a competitor opens up,
so
across the street or whatever?
They started construction probably, maybe 15 days after we started. So,
is that just a random piece of bad luck, or is there ways to?
Is it common? I can't say it's uncommon because most pizza is probably the most heavily consumed food in the U.S. So, in this particular example of pizza, I don't know if this will be uncommon. I would definitely wouldn't call it rare because in almost every plaza you go to, there's likely going to be a pizza restaurant in that plaza. But if you have a unique concept like fine dining, then the competition might not be there as much as a quick service restaurant might have. Yeah. So it depends on what you're opening or what type of restaurant you're opening.
Mm-hmm.
Like a food truck, what's great about them, they're portable.
Yeah.
So they don't have to They just need to find, okay, where's the best spots.
Do you work with some food trucks?
We don't mind doing them, but we don't have any in our current portfolio now. That's actually one thing we probably don't have. We have fast casual, fine dining, quick service, franchise, non-franchise, but we don't have any food trucks.
How many locations does your average customer have? Or is that a very big?
We have some that own close to 30 locations. We have some that just 1 or 2, some that are 5. I mean, it just varies.
Okay.
Yeah.
Okay. What are some of the tools that restaurants use now that help you?
Yeah, well, the tricky thing about restaurants, and kind of what we were talking about before, is by staying in our lanes, we can see how much restaurants are evolving. And because they're evolve, the tools kind of evolve as well.
Mm-hmm.
For example, before COVID, they weren't using third-party delivery apps like DoorDash and Uber and stuff like that. But now you're seeing pizza restaurants that deliver pizza are actually using Uber Eats.
Mm.
Because what we're finding is that the customers are very used to convenience and they want to use an Uber app. Mm-hmm. So sometimes there's some tools that you can't control that are in the palm of your customer's hands that you just kind of forced to join.
They all have Uber Eats on their phone, therefore you need to be on Uber Eats because they'll find somebody through Uber Eats.
Exactly.
Okay.
Yeah. The other thing is, depending on the restaurant, the tools can be very different. So for example, with a lot of QS or franchise QSR, you don't have a lot of control. You're mandated to use the systems that they require. You're mandated to use their food vendors. There's things that you cannot deviate from. Versus a fine dining or fast casual, as long as you're not linked to a franchise, you have more control. But typically you need more tools in your possession to be able to make better decisions. Mm-hmm. For example, there's a company called Margin Edge.
Yeah.
So we use that as cost engineering to say, okay, if this plate you're serving to your customers for $20, do you know the price of that plate? Margin Edge will help you determine that. Mm-hmm. But a quick service restaurant, you don't need it because you cannot shop other vendors anyways. Mm-hmm. So in some instances it's useful, and some instances you need more and more tools like Margin Edge or Bill.com or Ramp or whatever that service is. So it just depends on
what were the other two you just mentioned? Ramp and what?
Ramp, Bill.com.
Bill.com? What is that?
Bill.com is a accounts payable system.
Okay. So
for example, if you need to pay a vendor, or, well, let me put this in the restaurant example. Let's say you're buying produce. Because typically you need produce, you have to order very frequently because it expires in a short period of time. So let's say you order produce, the vendor comes to the store, they give you an invoice, you get that invoice, you upload it to Bill.com, and in Bill.com you can go to the accounting department, and sometimes it's us, like the accounting firm is the accounting department. We look at it, we say, okay, we need to code it to this, then we'll send it to the owner or whoever the manager is and say, hey, can you approve this? And then they approve it, and then we go and pay it out. They'll send a check or a e-check or whatever, however they signed up, and then we can get the money sent out. And Margin Edge also has that same feature, but what's good about Margin Edge is they're specific to restaurants, mm-hmm. and it helps you gather costs much better. Versus Bill.com is more for all industries.
Okay.
Yeah.
I'm talking to Bo at Margin Edge on Friday.
Oh, okay. Nice.
He's the founder or one of the founders.
Yeah, they have a good platform.
Yeah. Who do independent mom and pop restaurants use? Is it?
Yeah, mostly independent. The QSR franchise don't really have a need for it.
But I mean, if you're like a single location, full service restaurant,
then I would highly advise it.
You would highly advise Margin Edge.
Absolutely, yeah. Because it's just, you need to be, most restaurants run between 26 to 30, I'd say 32% food costs. Mm-hmm. But you need to be able to say what plates are what plates are costing more or less than that metric.
Yeah.
So if you have something that's costing you 40%, then that you could either be a loss leader, or you could say, hey, we need to increase the price on this.
Mm-hmm.
So it just helps you get better margins.
The restaurant subscribes to Margin Edge, but you have access to it through being their accountant, or is that?
Yeah. So there's lots of features, not just cost engineering, but also the bill pay feature, like Bill.com has. It's all integrated to one, and it's specific just to restaurants.
Okay, that's interesting. I'm looking for. I've heard a lot about them. I'm looking forward to talking to them. Do you? And Bill.com. What was the other one you mentioned?
Ramp.
What is Ramp?
Ramp is, that one's a little bit different. It's more for credit card management. So, for example, and to give you control. So, let's say, Will, you're my employee, and you're a manager. I can give you a credit card, set limits on it, and let's go back to the food produce example. Let's say you had to go out to a Publix or some supermarket to buy produce for the store, and it was $100, right? So if you slide your Ramp card, Ramp will say, hey, Will just spent $100 at Publix. What did you buy? And it will tell you, is it food? Did you go meals? Did you buy something for yourself? And then it say, hey, upload a receipt. And you can take a picture right from your phone and snap a picture of it, and it will upload into the Ramp portal. And then us accountants can go in and say, oh, okay, Will purchased veggies and meats for the restaurant.
Okay.
So it gives us better awareness of what's being purchased, but it also allows the managers access to credit cards without having to do reimbursement forms and things like that.
Okay, got it.
Yeah, that's really neat. It's a lot of it's AI based.
Yeah. Okay. What are your customers telling you right now is going on out there? And I say that because you hear that the consumer is not spending as much. There's a lot of uncertainty. Food costs keep going up. Labor costs keep going up. Margins keep going down. Like, what are you hearing?
So, I mean, I get all of the above. Will, you're right. So in Florida, wages are going up so much. I think right now minimum wage is $13 an hour. In September, it's going to go to 14, and then next year in 2026, it's going to go to 15. So, labor is putting pressure on restaurants, and then in addition to that, the food cost is also going up. So, I mean, there's just a lot of pressure, and in quick service restaurants, especially, most of the customers are going to be price sensitive.
Mm-hmm.
So it's hard to find that balance between, okay, we have all these rising costs, and then do we raise prices, or can we find some sort of tech to help reduce the cost? I think those are the biggest challenges right now. For food costs, you've heard of this company, Food Service IQ.
I was just about to ask you about Food Service IQ. Yeah, I think, in fact, I was just emailing with Neil last night. I mean, this is talk about it. Why did you bring that up? I'm curious. It's probably the same reason I was, but.
Oh, I just brought it up because I got introduced to him about 2 weeks ago, and because one of my clients in South Florida, their chicken prices are out the roof, like double what it used to be. So I'm like, man, we need to help find the client a solution. So if we can help find them a solution, that's a win for us as an accounting firm, because now they're gonna make more, hopefully expand more. And when we heard about Food Service IQ, actually, I think one of your guys told me. Michael told me about it.
Mike, Mike told me about it. We're very high on Food Service IQ.
Yeah, so I was like, okay, introduce me as soon as you can. And I had a really good call with Neil Neil Chan. Sorry. Mm-hmm. And I think he's onto something. I like his background. I like his background with food.
Explain what they do.
So, from my understanding, is they have these. They utilize economies of scale by having these major purchase contracts with all the food vendors. I think Performance Foods, Cisco, all the big food vendors, and then they go in and they utilize these economies of scales to help get better buying power. And by getting better buying power, they can use these contracts that they have in place and then you get in contact with restaurants and say, hey, we can save you XYZ on like chicken, or even supplies like cleaning, greasing, or degreaser, sorry. And they can come in and say, hey, if you're currently paying $4, and then Food Service IQ says, hey, we can save you 10% of that. And then what's cool about Food Service IQ is they only get paid if they can save you at least 2%. If they can't save you more than that, they don't get paid.
Yeah.
So it's a really interesting model that they there's only a fee if they can save you money.
Yep.
No fee if they can't. So there's
pretty
no
cool.
obligation.
Every time I get introduced to something like that and I get all hot and bothered and excited, I'm like, okay, what am I missing? And so I go to customers that I know well and I go, hey, check this out. Let me know if like this is real, or like, what do you think? I mean, it seems cool to me, but I don't own restaurants. And so far, the feedback's been, this is really cool. Like the first guy I called is Scott Maitland at Top of the Hill Restaurant and Brewery in Chapel Hill, North Carolina. Been a customer for 15 plus years. Really sharp dude. One of the first people I call for stuff like this. He's like, yeah, I'll talk to him. And then next thing I know, he's signed up. Like,
oh, yeah?
Yeah, I mean, we'll see if they can, if they have to prove it. I mean, that's what's so cool about it. Like, he's got nothing to lose other than a little bit of time, because they have to go prove that they can create the savings. And if they do, then he wins and they win. And but he was very impressed.
And I'm the same way as you. Like I'm a skeptic.
Yeah.
I'm an accountant. Like we have to be skeptical. We have to have a lot of utilize a lot of professional judgment on a lot of things. So the first thing I just asked him straight. I was like, listen, do you have any back end deals? Like, how do you get paid? And he's like, just the 2%. And I said, you don't have any back end contracts or back end deals where you get certain commissions, kickbacks, or what? And they're like, nope, just the 2%. So I'm like, okay. And that's what's big for me too, because you never know if there's any dealing in the back end. So I encourage my clients, is like, hey, listen, make everything transparent. Just ask them. The worst thing they're going to say is, no, there's no back end deals. Like in this case, he said there wasn't. So I'm like, perfect.
Yeah.
Yes. That's the problem with the food, the major food industries, is that you never really know, or are you getting the best price?
Yeah, that's right.
Which is where they come in.
Yep.
Yeah. And I like it.
I like Neil. I think I like that dude.
He's in Austin, right? Or is it?
Yeah, he's in Austin. Because we have the ability to easily introduce any partner like that to over 5,000 restaurants. And we're getting ready to introduce Food Service IQ. But we're real careful with that. Like, because that could backfire really fast, right? And that's important to us, that we're not introducing anybody unless the product has to be awesome, but the values have to be awesome too. The customer service has to be awesome. The way they interact with customers has to be awesome. There's companies that I would never introduce to our customers because even though they got good tech, they're really aggressive with sales. I don't want to put that on our customers. Like,
because then it's
why do you have these people like?
Yeah.
Exactly. So,
It's usually a red flag too, if they have so much emphasis on sales and then all of a sudden it's not performing the way it should be. Because I'm the same way. I like to vet it out too before I recommend it to anybody.
Yeah.
Because I don't want that. I would hate for a client to go through a process that I vet out only to disappoint them in like a month.
Absolutely.
Yeah. So, I think we're both on the same page when it comes to like just high quality service.
I don't know how to do it any other way.
Yeah.
I mean, I really don't. I don't know how you can do it any other way. I'm blown away with how many businesses. I have friends that are entrepreneurs too, and we just talk about how the bar for customer service is just so low. And I'm talking about in every industry, restaurants included. I mean, software included, accounting included. The bar for just doing basic things really well is so low that when you do those things, like, oh, they answer the phone when you call. Like, they respond to your email. I like quickly.
Yeah.
It blows people away. So the opportunity, while it's unfortunate for all of us that the bar is so low, and most businesses we interact with have a really not a great experience with customer service and things like that. When you experience it, you're like, oh hell yeah, I'm gonna.
Yeah.
So if you do those things and your customers are loyal, like I'm sure yours are. And I mean, dude, I went to New York 2 weeks ago, and I was meeting with a bunch of customers, and over and over and over, they would say, look, we've looked at all your competitors. Some of them even have stuff that maybe we'd like that you don't have. But the bottom line is, you answer when we call, and that matters to us. Like, they've experienced that when something goes awry, they need help, like, we're there. We answer the phone, we return the phone call, we return the email. And no matter how many bells and whistles and how much tech you have now, like, if you don't support it well, that's not good. And people don't appreciate that. And when they find somebody that will take good care of them, it's like our Table 301 Restaurants in Greenville, South Carolina, one of the best run restaurant groups in the country, in my opinion. And they say, look, we're not high tech. We're high touch with our customers, and we're high touch with our vendors. And all that we care about is, for every vendor that we work with, here's the one criteria: we got a guy. Like, they know that they can, whatever provider they have, they know they got a guy, usually a guy or gal, right? But like, they have a person that they know they can call. And hopefully things don't go wrong, but something always goes wrong. And they just want somebody that, they can pick up the phone and go, okay, we got a problem, and that person's going to be there for them. That matters. I think people have gotten away from that and kind of leaned into so much tech for a while now. And I think people are kind of, we've seen it, dude. Like, we've seen people that have left Schedule Fly for like shiny new stuff, and then they come back to like, there's no service.
For the service.
Yeah, it matters. Like, you don't realize how much it matters until you need it. And then you're like, well, this sucks. Like, I literally can't get. I had somebody tell me the other day, a restaurant owner, was a guy up in New York, their Facebook page got hacked. They spent 2 days trying to resolve. They could not get a single human being on the phone.
Oh, I get lost in those things.
I
don't even know where the support button is.
There's no way to. Yeah, it took them 2 days before they could actually even get some kind of interaction electronically. There's no phone number. There's no way to call. And that's. There are some, like, I guess, just necessary tools. Like, you probably need a Facebook page if you have a restaurant, but like, good grief, like, it's amazing that we have to kind of put up with that. So,
and this is especially true in the restaurant industry. How we were saying, the people business, like, service is the forefront of the business.
Yeah.
And we would, even in our firm, we have a policy. It's like, hey, if we get an email, we need to try to respond in 24, 48 hours.
Yeah.
If it doesn't mean you have to have an answer in 24, 48 hours. Yeah. But at least it's recognized that we got the email and say, hey, I don't have an answer for you yet, but I'm working on it. Yeah. And it just gives the client or a restaurant customer just some peace of mind, saying, okay, they've heard me and they've recognized that, okay, I will be working on whatever the question is. Yeah. Yeah. So it's not rocket science, right? You just say,
dude, it's so freaking basic. It's so ridiculously basic. It's like, maybe treat your customers like you would if they were your friend or your family member. It's not that hard. Yeah. Like, you do that, and like, people are like, oh my God, this is amazing. Like, just because I answered the phone. Like, isn't that what you do?
Yeah. It sounds cliche, but it's just a golden rule, right? Just
amen, brother.
That's all it is.
That's all it is. Golden rule right there.
If you want customer service, then okay, then provide good customer service. That's it.
That's it. Let's see here. All right.
You have a clock on the flip phone?
I do. 10:45. Wait a minute. Oh, how far is the airport?
I get you there in 45 less.
We probably should roll. You sure you don't mind taking me?
Not at all, man. It's been such a pleasure. No, I got you.
I've been Ubering. So I couldn't rent a car because my license expired. In North Carolina, any of you are listening there, the DMV is the worst freaking. It literally, objectively, recently the rankings came out. North Carolina has the worst DMV system in the entire country, and 5 of the worst 25 DMV offices in the whole freaking country, 5 of them
There's
are
a
in Charlotte. Yeah, dude. It's a big everybody in North Carolina is talking about it right now. You can't get a freaking appointment, and so I can't rent a car because I cannot get in, and I'm not going to. I mean, I'm going to have to go eventually, but at 4 a.m. and wait in some freaking line. We have people driving 3 hours from Charlotte, renting hotel rooms in little towns in the middle of nowhere in North Carolina to go to the DMV the next day because you can't. If you're in Charlotte, just forget about it. Like, you're either going to go at 4 in the morning and roll the dice, or you're going to go to another town a long way away.
Can you make an appointment?
No, dude, that's the
Oh, my
problem.
God.
Like, go on the DMV and try to make an appointment right now. It literally says no appointments available. And you go, oh, I'll go to next month. And no appointment. How about the next month? No appointments available for the whole freaking month. So, can't rent a car. So, I've been Ubering like all over. I've spent like $400 on freaking Uber rides like the last 24 hours just trying to get from place to place. So, if you don't mind, I'll take the additional conversation.
I'll be happy to.
All right, man.
And make sure your accountant knows your travel deductions are going to be going up quite a bit.
Yes, they are for this. That's right. Y'all, thank you for listening. What a great episode. I'm sure we have repeat guests on here. This is going to be one of them because this is really valuable, and Nick's doing awesome work. If you're listening to this podcast, I'm trying to get better about this. Please give us a rating. Go to if you're on Spotify, if you're on YouTube, if you're on Apple Podcast, whatever you're listening on, just go to that little stars and give us a 5-star rating. And if you would take 30 seconds or 20 seconds to put a comment in there, it helps. The reason I ask that is we're very proud that this is a top 5 restaurant owner podcast. That's awesome. We'd love for it to keep growing. And the way it keeps growing is you get ratings, because then the algorithms look at that and go, oh, yeah, like people like that show, and they put it in front of more people, which means more people get to hear awesome advice from people like Nick. So give us a rating. Thank you for listening. More of these episodes coming soon. We appreciate y'all. See ya.